So, honestly, I believe we have a great episode today. I mean, there's a lot of stuff that I really don't get to talk about much, and I seen a bunch of news, so I've had this week planned in advance already. So, and this is the week before my birthday, so this is just gonna be a nice, calm little stuff. Talk about some things that we've been talking about already this year, but also probably some same companies but different news. So today we got some news about AMD. We have talking about AMD, Nvidia. We're gonna talk about Elon and Tesla or whatever, and we're also gonna talk some more about Google, which is Alphabet, and Microsoft. So not really too much stuff. I do want to go over some new Vision Pro stuff, but that may be on the private channel. If you're not subscribed to the private channel, go look up Travian Holly. I'm gonna leave the link in the description. That's where all the vlogs and other videos will be going at that aren't podcast material. So more of my unboxings for tech and a bunch of other stuff will all be in there. And you'll get to see more of in my life and things like that because I'm gonna be recording another vlog. I have 2 out already, and I have one more that I'm in the middle of recording. I'm trying to do a vlog every other week on that channel. So, and then I'm trying to have content that I want to build up to drop on the opposite weeks. So it would alternate kind of like that. It's just my little channel. All right. So, but don't forget to like, comment, subscribe. The first thing we're going to talk about is some cloud information and some numbers, because who don't like numbers? As I said, we want to learn stuff from many different perspectives and news sources. So we have a few videos basically on how Microsoft is doing in the cloud and stuff. So if we come over here, see, we have Microsoft revenue rising. I haven't watched any of these videos in depth or really at all. I want to really get you my live reactions on all of this stuff. So this talks about how the cloud growth, talking about their cloud growth and comparing it to other businesses and things. One that probably we should look up is Amazon's, but let's go through these videos before we do any extra searching and things and just see what they have to say.
Microsoft reported earnings right after the market closed, and we did have revenue beating analyst estimates, the bottom line beating analyst estimates as well. But the stock is falling in after hours trading. Let's get more insight now from Anurag Rana. He is Bloomberg Intelligence senior technology analyst. In terms of the numbers, it looks like Microsoft delivered, but perhaps not by as wide margins as maybe investors had expected, given the movement in the stock up 8.3% so far this year.
Yeah, I would say broadly their results met expectations to slightly exceeding them. But the big factor with Microsoft, as it is in almost every quarter that we follow, is what's going to be the guidance for next quarter. I think that's really the most important part right now, because what we are seeing after 2 quarters of stabilization in cloud results, now the question is, do they pick up or not in the second half or the second fiscal half for Microsoft?
What actually causes that pickup on Iraq? I mean, what do they hang their hat on?
Yeah, there are 2 factors. One of them is companies or corporations who have been cutting back on cloud spending for the last 1.5 to 2 years. They come back and increase their cloud consumption. The second big key factor is increased contribution from AI workloads. So if you're going to use more ChatGPT, Azure makes more money on the back end.
So this gets us to a broader question here about the strategy around AI, the integration into the back office, integration obviously into some of those forward-facing products like the whatever that new Office suite is going to look like here when they release it here. Where do you see the most potential for them to monetize this?
Yeah, remain for the next 12 to 18 months, the biggest contribution is going to come in Azure, Microsoft Azure, or the cloud infrastructure product. That's the back end of ChatGPT and other workloads. After that, we expect to see more contribution from these Copilot products that you're talking about, because they just came out. There was a big base. It's going to take some time for them to contribute. But we are very optimistic that in the long run, Microsoft is probably better positioned than any other software company out there to capitalize on this increasing demand for Gen AI workloads.
What would Microsoft have to say in the earnings call later on that would restore investors' faith that it deserves the valuation it has right now?
Yeah, so Azure growth came in at about 28% in constant currency. Microsoft guidance needs to be 28 and above for them to basically either recover or even stay slightly negative, because as you said, over the last several months, Microsoft stock has done fairly well. So expectations are high. And I mean, all of that hinges on that Azure guidance at this point.
So there's more on this. But basically, when it comes to one of the reasons I want to talk about this is because of the overall cloud growth thing. And I feel like this is very important, and especially for this whole AI stuff and how big Microsoft has been recently. They weren't expecting cloud growth like this. Personally, I've worked with a lot of cloud environments and things. And from my experience, I don't think Microsoft is top 1 or 2 when it comes to the cloud infrastructure and stuff, just from my experience. If you guys experience something way differently in your tech jobs and roles and stuff like that, let me know, because just in my experience, I don't see it in that aspect much for them. I would say they're probably 3. If anything, they're still probably top 3 in the cloud thing, but I figured after this last year, their cloud numbers would have went up. And I say that because you heard him talk about it in the video right there. He was talking about how ChatGPT uses the Azure cloud form and all of that other stuff. If they have such this popular pipeline and a lot more people are trying to use there's like AI systems off of it, then it would make sense. But I bet you a lot of other companies are using Amazon and Google's cloud numbers more, and we have some more details around the details around Google's numbers too, because this whole segment is going to be strictly about the cloud usage and things. But this is more on it.
Print this press release off and conference call and put it in the loop. I mean, if you look, the cloud numbers here are off the charts. Copilot, remember, this is all about AI. Copilot, you have over 1 million customers right now from a subscriber perspective. Enterprise are lining up. Monetization's here. This is just the start of the revolution. Right. I think this is as bullish as we could have expected.
Dan Ives, go out 3 years. I was talking with our great Joel Levington this morning about, the timeline out. I want you to be an adult. I don't care about the next trading day. I don't even care how we get Microsoft to Valentine's Day. Give me 2026. Where is this juggernaut then?
I think it's somewhere between 4 to 5 trillion. I mean, but Tom, let's just put some numbers around it.
Please.
There's an incremental 100 to 125 billion of cloud revenue not reflected in street numbers. If you put that into EPS, I mean, you're really essentially looking at what could be an incremental $3 to $4 of EPS that's not reflected in the stock.
Yeah, well, I was on the conference call and I said to Satya, I said, don't get rid of Diablo 4. But tell me about Activision, because I looked at the free cash flow explosion and everybody's been out of shape about the revenue of Activision. I'm looking at the profit.
So this is this all ties into like last week's episode and everything for the most part, what he's about to get into right here, because what do we have here? We have him bring up the whole AI and Copilot stuff. The Copilot just crossed my mind. It literally went left. Microsoft has so much advantages that use their cloud systems and stuff like that. They're estimating less. If they're going to be estimating less than what their revenue actually is, or how much more of their revenue are they expecting? These people are expecting them to do so much more better and inflated. It could be these expectations were high because of the Copilot using the cloud and the ChatGPT, OpenAI using their stuff and all the other use cases and things of that sort. That could be high. And then you have to think of all the acquisitions they just got recently. And are all those companies switching over to their cloud systems and things like that. That all plays a part in revenue and all of that as well too. And they're about to go into the gaming stuff. Yeah, we know their gaming division has gone through some trouble because look, they just did layoffs. They literally just did layoffs not too long ago. So I mean, it all takes a toll and everything, but stuff happens, man. Stuff happens. And they're gonna dive into all their gaming stuffs like Blizzard, Activision. I put them together. I said Blizzard. That would be wild if them two did a merger and that was what the name was. But Hey, that's what they're building constantly. So personally, I'm feeling like it can be two things. Maybe they were estimating higher than they thought they could, or others and their investors are estimating higher because of all the recent stuff that's gone across between Microsoft. I didn't put them in my top 5 companies last year, but in the beginning of this year, when I really thought about it more, I feel like they probably should have been there. But maybe this year, they'll be on the top 5 list. If you haven't checked it out, this is the first podcast episode of this year. So let's just hear more about what they have to say.
From day one, it's larger than what we would call Windows business. What does profit at Activision do out 2 years, 3 years?
Well, I think it's really about the cross-sell opportunity. I mean, that's something that probably could increase another 20-25% for me. From a profitability perspective, that's just going to give them more and more of a tailwind, because in the scheme of things, it's a rounding error, relative to the overall business.
And like, look, how much it says Microsoft will be worth $4 to $5 trillion. Let me just see something real quick. We're gonna do some research with us. Is my controller? Is my thank you. Google's net worth is a staggering $1.5 trillion. 1.5. See, Amazon. 1.77 trillion. So, and how much is Microsoft worth now? $3 trillion. So this is a believable number that they can get to. If they're keeping up everything that they've been doing recently, based off what they're looking at, they're already worth $3 trillion. That's a lot of money. They're worth already double what Amazon and Google's worth. You can put Amazon and Google together and they're worth more than them. Microsoft. Between all their acquisitions, they're doing something right. Obviously, they're doing something right. They might be the company to be, honestly. Maybe I was wrong on the number one. I mean, I put OpenAI as number 1 company last year, but Amazon has so much invested in them. So they're pretty much part of Amazon in a way. Like Sam Altman went over to Microsoft. They're doing numbers. I don't think anybody, just because these cloud numbers are, these videos are very differently. This video is talking way more positively of Microsoft. The last one was talking more negatively about the cloud numbers and the numbers that they were getting, revenue that they were getting and stuff like that. This is why we got to watch multiple sources. I'm getting very mixed reviews and stuff from multiple services and sources. It might be because they're trying to point certain angles and stuff like that, get people to look at certain stuff a certain way, but there's more, because they're about to get more into based on what I see here, more company stuff. Let's move out more. Let's finish what he's saying about this part, and then we're gonna move on more.
They're just broadening out on the consumer and on the enterprise, gaining more and more strength. And you look at the numbers are just, they're jaw-dropping.
They're truly, folks, from the scope and scale of this. Yep. To me, it's the Rockefeller.
I think actually really strong when we saw it from YouTube and a lot of their assets. I think the big thing on Alphabet is just what's happening in Google Cloud. You look at that, some of the parts, I mean, they're just starting to tap into that massive opportunity in the cloud. And we've talked about, one of my colleagues, Scott Devitt, that could add $30 to $40 per share to the Google store.
That's actually tough. That's nice. So this is like what all the companies are pretty much going through. Like, the cloud is so important. Having more companies and stuff use your cloud is way more important. Having them data warehouses is so much important. You'll be surprised how important data sections of businesses and companies are to that actual company, especially how much revenue comes in and out based off of them and how much work comes off of it. Data is so influential and stuff. Talking from experience, as I'm telling you, it is very relevant and great based on what you can do with it and how companies are using it. And you can see why they invest so much money into it. Some maybe more they need to, but the Microsoft, Amazon, and Google, Alphabet, their cloud infrastructures are good infrastructures, and one might be better to use than the other for certain use cases and things like that. But you see it here. They said they missed on the ad revenue and things, yeah, and they brought up YouTube some. Yeah, every company has their downfalls and stuff. We really haven't talked about Google too much. We talked about them. They recently had layoffs for certain positions and things like the voice echo thing and a few other stuff, the augmented reality thing. But they're moving towards different directions and things. Microsoft has layoffs in their gaming division. So all these companies that worth trillions of dollars, they going through certain hoops and stuff. And we're going to dive more into Google because there's more information on this than just what this video is stating.
Real simple here. Apple tomorrow, Amazon tomorrow. What do you expect?
Look, New York City cab drivers bearish on Apple.
And you can see right here. Even Apple has a cloud infrastructure. Like, people on their phones, you pay for how much cloud space to upload your photos and stuff. Like, you really have to sit here and think about all the use cases for everything and how stuff is used in that case, because these companies all have their cloud infrastructures that are worth the most amount of money. And you can see here, $9 billion revenue for their cloud stuff alone. Mind you, they have a bunch of other money coming from everywhere else. If they're worth, Google's worth a little over $1 trillion, what we both saw, but that's a big chunk. That's almost, it's almost 10% of what their worth is strictly in the cloud. And this is, mind you, it's more than that, actually, because this is only for Q4. So the fourth quarter of last year, they estimated to get just under 9, and they got just over 9 revenue-wise. So their estimates, they probably playing it safe. They know how much they're going to get. But so actually, it's worth more than that. If they're getting 9 each, that's almost $36 billion a year just for their cloud infrastructure. That's a lot of money. That's a lot of money. If that's Q4 and if it's 9 consistently, if they average $9 billion a year and say their worth or whatever is 1.3 trillion, it's almost, I'm not giving exact numbers, but almost 25%. Almost a quarter of what this stuff comes from their cloud base alone. That's how much data is worth. That is how much data is worth. So all these layoffs, whether people are talking about, hey, look for jobs in this and whatever, you're losing jobs for this. Guess what jobs aren't going nowhere? Data. Jobs in data. They not going nowhere. They need you. They need you to help build their pipelines. They need you to do a bunch of stuff. And they seem like one of the more secure ones, especially if you bring in a quarter of the revenue to the company. Especially if you had Google. Google, that data go crazy. Their cloud environment's going crazy. Q4 alone.
In terms of units and everything. And I think China's actually been relatively stable. I think that's going to be a breath of fresh air from Cook and Cupertino on units, on services, and on Amazon. And the big story is going to be the I'll call it a mini turnaround that they're seeing on e-commerce as well as cloud. We're going to look at the end of this week and say big tech's delivering. These knee-jerk reactions I view as kind of table scraps.
All right, Dan. So, I mean, I think, the big thing for Apple is China. So just give us a sense how you think that's going to be play out, or how you think Tim Cook's going to frame that out tomorrow night.
I think he's going to talk about demand's been relatively stable. There are some pockets of weakness, Huawei competition, but overall, the upgrade opportunities and the ASPs look strong in the region. I mean, it's our view that units show growth this year. The street's now baking in, I'd say, 5 to 10% decline. So if you start to hear that from Cook, along with services double-digit growth, you look what's happened to free cash flow that Keen always talks about. I mean, you start to now get a stock that should be closer to 250 rather than,
Right.
180.
I got 30 seconds, Dan Ice. Use of cash. When do they get off their butt? Sweeney wants.
So this is another thing. And mind you, I'm changing this background, not the video background thing that's around. I got new ones. Don't worry. It's a new month. We got to put in some new stuff. Almost didn't get to it, but after this, tonight, mind myself. I'm gonna get to it. But it's funny because I saw somebody else's live stream video and they were talking about Apple, and this headline right here that says the iPhone demand is dropping. I can believe it. This one person, I was watching their live stream and they were talking about, I don't want to give out any names or anything because I don't want to be like, I seem like I'm attacking him or anything like that, because I'm just saying from what I basically heard, and now what these people are saying, he made it on a chord that people typically stay with their phones that they keep. The phones that they get, and I think that is true to a point, to a fault. I think it's true to a fault. I think in America, when somebody gets an Android phone or gets an Apple phone, if you're not somebody who's really big on tech and things like that, you typically are going to stay with your phone carrier, the system that you're normally used to. So if you're used to iOS, you're going to stick with Apple and things like that. If you got Apple and you always grew up with Apple, you're going to typically stick with an iPhone. But this is why he said China. Do you know how many phone companies are popular out in the Asian countries and things like that? There's so many different phones. I haven't even touched the iceberg of those companies. I probably should do that, because in this year alone, we talked about Samsung. Look at all the good phones that they just came out with, that I'm looking to get into one of them. And so I can have one of each and see which one I like better and things like that. But that's just what life is right now, man. Like, oh gosh. Like that, their demand's going down. Their demand is going down. And he just said instead of them being worth 180, it should be 50. We didn't look up Apple, mind you. So Apple's almost worth as much as Microsoft. They're actually really close to Microsoft, and they were talking about they're worth 180 a share, and based on what he was saying, he's saying it'd be something more like 50. I don't think Apple will ever drop out there unless they split the share prices out and create more shares and things. But yeah, I don't know, man. I don't know. These are things that I just like. This is the first time I'm hearing like these people talk. I can't take their word as honor and everything like that on what they're saying, but that's just what I'm thinking. Like, Apple does a good job overall. I don't think the iPhones are ever going to really truly die out. They're always going to be popular, and they just released a Vision Pro. They got a new product, and when they come out with new generations of that, it's going to increase even more revenue for them. So I'm not worried about it.
To raise a dividend.
And just on that note, we're just going to go to the next thing, but this is more on Google and Alphabet about their cloud growth. This whole segment is just about cloud growth and things. They all tie into each other together. I just want to see. It's better to look at more perspectives and hear it from more people's mouths how the market is doing, so you guys can see what's really going on out here. How many of you guys are really knowing about cloud growth and things? And know what the cloud truly is and how the cloud is being used and things. nobody, I feel like most people aren't aware of this. So we have 3 videos alone today just talking about it, and it's amazing. And apparently their cloud growth was amazing last year, but they're pleased. Let's see what they're going to be doing better.
Alphabet earnings are out. The shares are down. And just moments ago, President, CIO, and CFO Ruth Porat spoke with Bloomberg Technology co-host Ed Ludlow. Ed joining us right now. Ed, what did she say?
Well, the market's clearly zeroed in on this idea that the search ad business missed estimates, right? And the stock's down significantly after hours. It's basically what she didn't say. She said there was no specific geographic weakness. She talked about them seeing growth in YouTube as well as search, but wouldn't say kind of relative, I guess, to the street's estimates where the weak part was. What's so interesting here is, you guys can see the commentary. They're zeroed in on the cloud, and we did not send a hot headline on this, but if you look at the top line, cloud did beat expectations, but from an operating income perspective, cloud operating income basically came in double what the street was looking for. And what Porat had to say about that in particular is, yeah, there's a generative AI contribution here, but on a more macro perspective that I found interesting, she said that every single industry sector that buys cloud from Google is showing strength right now, which is kind of a change from the language we had toward the end of last year.
Absolutely, because cloud was the weak point of the last earnings report, and it seems like it's gotten back on track.
And we know those numbers are real from the last video because they just showed them right here. Where they, look, numbers are the same exact numbers. So we know those numbers are real.
Track, whereas the ad sales was something that investors are really zeroing in on right now. Romain had made a good point earlier, which was that for these big tech companies, 2023 was really about cost cuts and getting their margins back to where they wanted to be. Did Ruth Porat say anything about cost cuts and expenses and what back to where they wanted to be? Did companies 2023 was really about cost cuts and getting their margins back to?
This is what I was trying to look at. Fourth quarter ad revenue, and look. They didn't even show the numbers for ad revenue in the last video. They didn't show it. This is what I'm talking about, where we have to see multiple stuff. We have to see multiple stuff about this because they said that they weren't happy about the ad revenue or whatever, and there's reasons why it's down. It's still, for Google, it's still $65 billion in the fourth quarter. And they pay a lot. They pay a lot of money to YouTubers in the fourth quarter. Like December, I heard YouTubers, they love December. They be putting out videos like crazy because of the ad revenue and stuff from December. Because it goes crazy. And that's, yo, they got their hand in everything.
Where they wanted to be. Did Ruth Porat say anything about cost cuts and expenses and what efficiencies look like in 2024?
Yes, that basically the plan is to reallocate talent within the company to higher growth areas, and that will of course include AI and AI's contributions to the cloud. If you think back to 12 months ago, Alphabet or Google did layoffs, frankly, in one fell swoop, but the strategy this time around has been to do it on a team-by-team basis. And what she explained to me on the phone is that the product managers look at the resources that they have, and they know what their targets are in those areas where things are growing highly, so the pace of hiring will reflect focus on the areas we know are growing more, we'll hire there, slow hiring in the areas where there is less growth, but also this reallocation, in other words, moving top engineering talent from one place to another, or focusing any spending on getting the best talent in AI, which, as you guys just heard from your last guest, they're not just dealing with their public market peers, the private market is out there in force offering big salaries for top engineering talent right now.
Yeah, it's a good reminder. Ed Ludlow, Bloomberg Tech.
So that's pretty smart. I actually like that. One thing that I like the most about it is, hold on, okay, just making sure that's not relevant too. The one thing that I like the most about that is because they're making these changes and additions within the company. Everything is united, as we can say. They're moving people around. They're not exactly taking layoffs and firing a bunch of people. They're just straight moving them to be better. This is something that company are we talking about right now? There's so many companies going on. We're talking about Alphabet. Yeah, they just did their layoffs. And the news, we covered it about their layoffs as well too. Some while ago, early in the year, we covered it, and that video did good. But I mean, I feel like I'm definitely in favor of them moving those people around rather than just letting them go so that they can keep their talent. That's just a very smart move to be able to find out how to move somebody else elsewhere rather than. Ooh, I just found out more news. We'll cover it next week, but rather than go out and try to just hire more people, because when you hire more people, what do you gotta do? You gotta pay them more. That people are coming to look for more money when they switch jobs. In most cases, they're looking to find more money. They are. That's one thing. Two, they not loyal to the company because they coming from somewhere else. They not new to the they're new to the company. Somebody's in the company already. They're most likely going to be loyal to the company and stay even longer. Especially like, hey, I didn't fire you. I could have laid you guys off and we're just going to move you and things. They might feel more appreciative of that. Who knows about that whole ordeal and stuff. But that's definitely smart, being able to keep everybody in-house still and try to move them around appropriately. That's a good way of thinking about it, in a way that I would personally think about it. Another thing that they brought up at the very end of that is, as we wrap up this whole cloud engineering and cloud-based news, they talked about how generative AI is putting such a great rise on the profits of these cloud systems. And I said that about Microsoft with OpenAI and things. Like, of course, these other companies have generative AI going into their companies, which are also pumping up their numbers and their revenue and things of that accord. All these companies have it. They all have it. That's all that they've been working on in the last year, and they're going to continue working on it. So definitely expect their numbers to be up from that too. So just everybody has to keep that in mind. They're leveraging these things in their own ways, and each one of them have their own AI platform. Dang near every company has their own AI platform now. Especially, they have their own cloud warehouses, Google and Alphabet, and they have their own bot. It's not as good as ChatGPT though. It's nowhere near as good. There was a bunch of stuff going on about their bot that was wild. That it was just wild. I believe it was. Or was it Bing? It was Bing. It was Bing. My fault. But I still don't think Google's bot is as good as ChatGPT is at all. So, I mean, that's a bit about it for the cloud information.